We've got Mary Ellen McGonagle. She's with MEM Investment Research. She's been trading since she was 21 years old. And she went to work on Wall Street right out of college. That's pretty awesome. She worked at Goldman Sachs and Equitable Life, where she was quickly promoted and managed 8 accounts worth over $2 billion. That's a lot of money. So we're really excited to see what she's going to teach us today. She's going to be talking about uncovering best outperforming stocks, 4 characteristics of stocks poised to trade higher, the 1 key element found in big winning stocks, and simple technique for screening top stock candidates. So we're excited to get started. Mary Ellen, we got you on the line here. I think I see her. To get her unmuted. There she is.
Hi, how are you today?
Hi, Mary Ellen. How are you?
I'm well, thank you.
Welcome.
Thank you for inviting me. This is exciting.
We're delighted to have you here. So the floor is yours,
Okay.
and you can share your screen when you're ready.
All right. And you can see that, I'm sure.
Yeah.
Yes.
Perfect. Okay, I am going to jump right in. I have a fair amount to cover. Hopefully I can get to all of it, but I want to thank you for that introduction. I do have quite a bit of experience both on and with Wall Street, but as it relates to equities, very exciting period. For 15 years, I was with William O'Neill and Company. Bill O'Neill is the founder of Investors Business Daily. The entire his company is built around a system where there are common characteristics that he uncovered among these big super winning stocks. We're talking about stocks that go up triple digit, 1,000% plus. And there are actual characteristics among those big winning stocks just before they take off. And during my time with O'Neill, I traveled the globe working with top portfolio managers and analysts, not only educating them on that system, but also advising them on the market. So my current firm, MEM Investment Research, is founded on those same principles. So I do tend to traffic in faster growing, high growth stocks, but they also are big winners. And you can certainly go to my website for more information, meminvestmentresearch.com. You'll see some of my more recent picks, my track record, an example of my newsletter, and so on. But it's really been an exciting journey that is still going on. So let me carry on here and talk about some beliefs in the market, some that I have and I've held certainly because of my many years of experience, and I thought I would share them with you quickly. One is the fact that high growth stocks, they do trade a lot higher and faster during bull market cycles. So it does get certainly a little tricky for all stocks when we're not in a bull market, but also you will want to diversify your holdings over several strong areas in the markets. You'll see that on a daily basis, there is going to be an ebb and flow so that you can kind of buffer your holdings. Another thing is really critical, I do this in all of my presentations, is the concept that you absolutely want to have a solid exit plan. You want to not only preserve your gains, but also your confidence. If you begin to lose, it can really wear on you. So having a good exit plan. And then you really have to have what I call a strong belief in your trading system. There's a lot of different, certainly, strategies out there. You want to identify a trading strategy and system that really aligns with your beliefs in the market. And that way you will stay with that trading system. And that's one way that you can be successful. So also you want to take a look at the overall market trend. That is going to be your overarching as far as whether you get into the markets, do you invest heavily or not, you want those tailwinds behind you. So we're going to take a look at the broader markets. And I do have current examples, just mentioning that they are primarily for educational purposes. So let's take a look at what we're going to cover today. I'm going to just drill down quickly and briefly on into the broader markets. Then we are going to get into the good stuff, and that is those common characteristics among these big winning stocks. Also, these currently, what sectors have these winning stocks, what's looking exciting right now, and then best time frame for your charts. A lot of that will have to do with your investment horizon, but I'll share with you those time frames that I've found very useful over the years. And then again, having that exit plan, and I'll share with you one system that can help you identify when the uptrend is potentially over. So let's get started. This is the S&P 500 index, a daily price chart. Just to get a quick overview of where we are right now, we can see the S&P 500 did peak in price here in the beginning of September. We did go into very briefly, but we did go into a correction. But more recently, the markets have regained their upside momentum. The way that I identify that is I use these simple moving averages. This red 50-day is most relevant, certainly for me and for an awful lot of Wall Street. They want to see the broader markets as well as individual stocks trading above this critical simple moving average. So it got a little dicey here when we broke below, but more recently this week we are back above that 50-day simple moving average. I have some other outside momentum indicators. RSI is a relative strength indicator, so it's above 50. That's in good standing. And then stochastics, this is another momentum indicator, also above that net neutral 50. So the broader markets are looking fairly healthy. We do certainly have volatility, but that is a look. Let's take a bigger view, a weekly view of the S&P 500. This red line now becomes a 10-week or a 50-day. We have broken above that. Also RSI and stochastics are positive. When you're looking at these longer term charts, it's telling you that the intermediate term phase for the markets, not just near term, is also constructive. A lot of people don't use a monthly chart, but this is what I worked with when I was working with professional money managers. They don't want to get whipped around. They're going to use this bigger picture view. This is a 6-month simple moving average. You can see when it breaks below that, these are your bear market periods. The end of 2018, the more recent February, March bear market, but longer term, we are also looking constructive. So let's take a look. This is a quick view of how important it is to keep your emotions at bay, because oftentimes if you don't have a solid system in place, you will get nervous, worried, and ultimately oftentimes sell too early. That system where you're looking, whether it's at key moving averages or momentum indicators, they are built and designed to help keep your emotions at bay. And then now let's go ahead and move into some of the causes of why a stock would move higher. And first off, it is going to be heavy demand led by institutions. These guys are the major money players. They're creating that footprint on that chart. About 80% of that volume is going to be these big guys. So we're going to talk about accumulation, the one primary driver, and this is going back to Bill O'Neill's study of the markets, went back over 100 years, studied every market cycle, studied those big winning stocks. And the number one driver of a stock's upside movement is strong earnings and sales. That is a fact. That's something that you're going to see bear throughout this presentation. And it's not only current, it's also going to be estimated earnings and sales going forward. Other drivers are also going to be if the company is providing an innovative product and it's in a growth area of the market. So for instance, cloud computing, Internet of Things, both very, very relevant during this, certainly this lockdown period, a lot of people working from home. So these innovative products are allowing not only employees, but also students to stay connected. And this in turn is going to push demand to be very high and consequently strong earnings and sales. So let's take a look. This is Ring Central RNG. It's a smaller company, and what I'm pointing out to you is an example of a big winning stock. At this point, Ring is not on my suggested holdings list. I'm taking us back to a period when it was in a very strong uptrend. We did pick this stock up here back in the beginning of 2017 prior to this very significant advance. So, we can see what I like to do is look at stocks breaking out of what are called bases, saucer-like bases on big volume. The stock oftentimes will have an advance, in this case a multi-year, a double year advance, and then there will inevitably be a pause, a reset where the stock builds another base before advancing further. Your outside indicators are positive. The reason I'm pointing these arrows out, each one of these arrows, this is a weekly price chart, is identifying when Ring Central reported their earnings. Very solid earnings, triple digit. You can see this base breakout out on earnings, and then each quarter the company was posting very strong earnings. You are going to want to have a system. I talked to you about that earlier in order to trade these winners. I'm not going to get too into it, but you can see when the RSI turns negative. You also want to see what is the S&P 500 doing, but a break below that 50 is oftentimes a signal, certainly for the near-term dynamics, that that uptrend has ended. This was a very tough period, the fall period of 2019. A lot of these software stocks did get hit. And you can see that if you have a system in place, because we were looking at a weekly, everything is smoothed, but you will want to avoid these breaks below key support where your outside indicators are also flashing negative. So let's take a look. We're going to look further at some of the other common characteristics of winning stocks. I talked to you about strong earnings and sales. These are reported quarterly, and oftentimes strong sales will ultimately generally translate into strong earnings. And that's an important concept for these newer issues, IPOs. They're often going to come to market without earnings. So you're going to pay attention to those sales numbers. And they also need to be in a period of what I call sustainable growth. So in other words, it's not a one-off where the company has strong earnings. Perhaps they sold a subsidiary company. I'm talking about they are providing a product that is being seen with high demand, and those numbers are not only currently looking good, but they are sustainable. Let's talk about products or services being innovative. And this is what I touched on as far as then cultivating high demand from that innovation. So is the company, are they offering a new product, or perhaps it could be a new way of delivering an existing product? And this can go back many times over history. We can look at in the 60s, fast food was a new concept. McDonald's came on the scene, and they provided this new way of delivering an existing product. So that's a rather basic but very sound example of that. And then also the innovation, it provides some sort of a powerful push that's going to drive those earnings and sales, and then subsequently the price of that stock. And we will get more into that. I'm going to share a number of current examples of stocks that are innovative and look compelling. But we talked about the stock being under accumulation. So in other words, you want other investors, primarily institutions, to be interested in that stock. It's going to help drive the stock higher. One way you can tell if a stock is under accumulation is you'll see an increase in volume. And this is a screen that you can certainly run, whether it's on a daily or a weekly basis. Show me those stocks that are up on volume. That volume oftentimes can indicate that there's a shift in the market's sentiment about that company, and it can be either positive or negative, but this is a very, very sound screen that you can run and couple that with some of these other characteristics that we are talking about, and also volume in entire sectors. A lot of my work, I'm looking for what area of the market is under accumulation, in demand, because that's where you're going to want to be fishing. You are going to want to be in those areas that are seeing a lot of interest. And then also the increase in the amount of shares traded. It's oftentimes, as the stock is trending upward, if you continue to see high volume days, that is very foretelling as for that trend, that uptrend, to continue. And this is particularly true when a stock is breaking out of a base. We'll get to some examples there. So basically that increased volume is telling you that the stock is being accumulated most often by those big institutions, and it really validates that breakout, and it's telling you that more upside is ahead for that stock, provided the broader markets remain healthy. More traits for stocks poised to trade higher. If you just want to take notes, these are the types of items that you will want to screen for. If a stock has hit a new high in price, oftentimes this can be contrary to your thinking that it's already hit a new high, but the reality is when a stock does hit a new high in price, there is not overhead supply. There's not people that purchased the stock maybe a month ago and they're looking to get out. So that new high in price is bullish. Of course, the company reports strong quarterly earnings, by strong, anywhere from that 15% on up. A lot of my companies are posting the ones that I recommend to my MEM Edge report. Oftentimes it's triple digit earnings, year-over-year growth that these companies are reporting. I talked about that RSI and MACD, moving average convergence divergence. This is a relative strength indicator. These are two momentum indicators. You want those to be positive, indicating that the momentum is on your side. And then the price, you want it to be above those shorter term moving averages. This will all make sense as we move forward. These moving averages can then act as support as opposed to upside resistance. There is one key ingredient that absolutely every winning stock has to have, and that is a positive chart pattern. In other words, you can have and uncover a company that's innovative, they have strong earnings, but if the street or if investors are not interested, then it will not have a positive chart pattern. So that's an absolute necessary. So uncovering those positive chart patterns and really being able to read charts if you are newer to investing, it does take a bit of time. I will often tell the story. The first time I looked at a chart, it was on paper. I was unclear how to hold that paper to read it. But again, it's really will pay off. That is definitely a critical component. And then when you put the positive chart pattern together with those other ingredients, such as those strong earnings and sales, you'll be, some of my top clients are those that can marry those two. So let's take a look at a company some of you may be familiar with. It's called Shopify, SHOP. They provide a retail platform for individuals as well as companies to provide their clients to sell their products. They also do a lot in the way of helping with inventory and with funding. So all-in-one platform. I'm taking us back. This chart ends May 2019, but what I did want to share with you is the company did come public back here June of 2015. A lot of times they come out public, the numbers just aren't there, but take a look here at the end of 16, the stock did break out of what I call a flat base. This is a weekly chart, so it was a back and fill period, and the stock shot out, earnings related, broke out of that base, and the stock did go on to advance 300%. And I talked about that period for about 8 months here in 2018. Shopify was in a go nowhere environment. This is where you have your system in place. Perhaps you put your money to work elsewhere. When it breaks out of that base again, and a new advance will go on, and that's not uncommon. 8 months is a bit lengthy, but oftentimes these winners will consolidate before charging ahead further. This is a daily price chart. You can see in the daily it gets a bit more whippy, but what I did want to point out to you is that concept here in the beginning of 2019 that Shopify did hit a new high. It also broke out of this nice 4-month base before advancing quite a bit higher. So Shopify would be a company that is and was disruptive. It still is as far as their offerings and their ability to really amplify what is now commonplace, and that is digital sales. Certainly during this quarantine period, a lot more in the way of online sales. So this is taking us to the beginning of this year. So this is a continuation of that advance. We did, of course, this is actually January. Okay, this is that fall period when I talked about 2019, where all software stocks really had a period of consolidation. So this is that break back above those shorter term simple moving averages that I mentioned is so critical. If we go back here to this period, you can see where the stock would rally right up to that 50-day pullback, 50-day, and then once it breaks up above on high volume, I talked about accumulation, and then you marry that with a positive RSI and a positive MACD, the stock is on its way to a new uptrend. So just kind of marrying those characteristics and showing it to you visually so you can get a feel for what you'll be on the lookout for. And so let's take a look at Shopify again. This is taking us right into this year's bear market. But I did want to point out to you that the company did hit a new high in price following a very strong earnings report. But of course, we'll go further. Let's see if I can, I believe I have that next Shopify chart. Yes, okay. So I do have it further, but what I did want to point out to you is the stock did hit a new high going into that bear market, very bullish, but of course once the broader markets collapsed, this positivity goes away, and you'll want to pay attention. That broader market framework is going to be your ultimate decider as far as your stocks, whether you're going to stay with them or not. This is a look at how you can use what I call group dynamics. This is an ETF for software stocks, and both RNG and Shopify are in this software grouping. So how not only paying attention to the broader market indices, but also paying attention to the group that your stock is a part of. So we can see that these software stocks did back here have this. This is a current chart of IGV, this software stock. Let's start with the fact that software stocks were one of the first leading areas out of this March bear market. All about cloud computing, keeping quarantined individuals connected, and we can see that software stocks were very, very strong out of that bear market. So from my work, this is where I did a lot of my examining, looking for uncovering big winning stocks, and we did. We had certainly Shopify, a number of triple-digit software stocks came out of here. But more recently in July, we can see that they were in a go-nowhere environment. They peaked here at the beginning of September and are still trying to regain their momentum. The reason you want to know this is because if you have a stock in a strong area and it begins to perhaps falter or in this case, go nowhere. You want to know, is there something with your stock that you might not know about? The earnings are decelerating, or is it broader market related? The markets are no longer as interested in these big winning software stocks. Perhaps they've moved on to other areas, retail and so forth. So that is something that is also critical. Another item to be aware of is that these leading stocks, this is Appfolio, a leading software stock, they are going to have these multiple, what I call base periods. These are periods of consolidation. This is a weekly price chart. We can see that the stock did break out of this nice base, went on for a full year. This is a 1 year nice uptick here. This was a big winner for us back here in 2017. And then oftentimes you'll have this secondary period of consolidation and another leg up, another base. So just a common theme that you might want to be aware of. So let's take a look. We talked about innovative stocks, and when a company does have a more innovative product and they have excellent management that can execute. This is Lululemon, LULU. I'm sure you're all quite familiar with this particular company and their athleisure wear. This starting us, this actually is a chart taking us into that bear market. So it's taking us into March of 2020. It's a weekly chart, but I did want to point out to you the relevance here of these high earnings as a driver. So each of these 33% year-over-year earnings growth, very, very strong, 72%. The company did come out during this period, the beginning of 18, with the disruptive, with innovative menswear. That's been a big grower for the company. Again, each of these periods is earnings. And then also their digital and international sales picked up. This is mid-2019, well before digital sales has now become much more commonplace. But again, each of these periods you can see, now this is the bear market of 2018, so it fell in line with that. But again, these strong earnings are going to be the driver for that continued uptick in the stock. So here's a daily price chart of Lululemon, and I did want to point out to you, this is a more recent one. This is taking us out of the bear market, and Lulu was another big winner coming out of this bear market. This was another big winner for my MEM Edge report because people staying home were very inclined toward these comfortable athleisure wear. And so we can see, I talked about the stock breaking back above these simple moving averages. This was our first clue as far as getting back into Lululemon. And let's take a look here, because I talked about having an exit plan in place. This is this peak in the beginning of September that was certainly the broader markets and a lot of areas did get hit. So when you are looking at an exit plan, when that stock breaks below this 50-day simple moving average, take a look at that big volume break. That's telling you that the stock is under distribution. And then also your outside indicators, your RSI and your MACD turned negative. So we are actually, we did get out of Lulu after this big run. We're waiting for it to break back above this 50 because we're getting a positive RSI, MACD poised to turn positive. And so we're looking for a potential re-entry here in this innovative company. And another big winner for us back in its day, this is PRFT, a smaller software company. And again, earnings as your driver. Each of these periods, these big gaps up or are earnings related. And it did peak here with the broader markets with that March bear market, but another big winner, just kind of hammering home that point that earnings are going to be that big driver. This is Appfolio, and I showed you the weekly chart, those multiple base breakouts, but using a daily price chart. This is a 2-week period. The stock had a shorter period of consolidation, broke out to a new high on volume with positive outside momentum indicators would help you take advantage of this. Pointing that out, we did get into that in March of last year. Another big innovative company, of course, Tesla. And we can take a look here at a number of characteristics that are driving this stock higher. This is, again, taking us right into that bear market. But back here in the fall of last year, we can see that the company reported earnings and sales that were way ahead of estimates. So the stock gapped up big volume and went on to advance. Here again, they reported super strong earnings February of this year, 20% above estimates. So that's going to be your driver, as well as their innovative new vehicles, electrical cars. They're getting into trucks. So what I did also want to point out when you're looking at these charts, this is April when the stock turned bullish again, broke back up above this 50-day with your outside momentum indicators positive. This is a golden cross, another secondary indicator, but it's when your shorter term moving average breaks back above that longer term. Just another interesting item that you might want to be aware of that's telling you that the stock is poised to trade higher. Tesla, here we are. This is a recent chart. So we can see this is that April advance back here where the stock broke back above this 50-day simple moving average, and we can see it advanced very, very nicely. This is about a 70% advance. The company came out with news here, another item that can really be a driver. They did announce record-breaking sales in China. China is a very big market for them. In fact, in China, their most recent monthly automobile metrics showed that electric vehicle sales has surpassed standard vehicles. So that's important to note because, again, Tesla's very big there, and it would be certainly important to them. The company also came out and announced a stock split that helped it advance further. Panasonic did increase their investment in Tesla as well. So both news items were able to drive this stock higher. Of course, the markets in general did peak here in the beginning of September, but Tesla's really holding its ground. It's finding support here at this 50-day simple moving average, which is quite bullish. I apologize. I think I'm just a little trigger happy here, but let's move on. Netflix, another big innovative company. This also, I'm taking you back to this beginning of this bear market. But what I did want to point out to you on this weekly chart, Netflix, of course, is they did first, they took over Blockbuster years ago. There was a period where you could have particular movies or shows mailed to you, but now, of course, everything is digital, and they really are at the forefront, really putting the movie and media industry on its ear. So taking us back to this 2016 into 17 on this weekly price chart, the company came out with earnings. This is that base breakout prior to this very significant advance, but they also added 3.6 million new members. The company had gone global, big growth in India and elsewhere, as well as the US. And we can see how that can be a big driver prior to this big advance. So again, strong growth internationally, producing blockbuster hits along the way. And on this weekly, you're using this 10-week or 50-day as your guide. This is that 2018 bear market. Didn't leave anything untouched. Netflix, of course, faltered. But here, more recently, going into the beginning of 2020, the company announced 333% year-over-year earnings growth. And that's really big news for any company, but certainly for a large company as big as Netflix. So very bullish news going into, unfortunately, what did eventually become that bear market. So here we are, a lot of individuals locked down. There is a need, certainly for entertainment. You're stuck indoors. Netflix comes to the rescue, and here we are with the stock breaking out of this multi-month base on big volume prior to a significant advance. This is the company from 380 up to 450. This is a current chart, and we can see the RSI and the MACD is positive for Netflix. So again, it has all of those key characteristics where the company's innovative as far as pushing change in an industry. They're producing products that are being met with high demand. They're coming out, they're increasing subscribership, which in turn is really driving high earnings and sales. And then you marry that with this positive chart. So actually this chart takes us to April of this year, but it certainly has gone on. I'm going to take a little shift here and share with you some groups that are really compelling and under accumulation at this time so that you can utilize some of these characteristics I spoke to uncover some winning stocks. So right now I'm going to shift it a bit. We're going to take a look at biotechs. And when you talk about innovation, this is where it is happening. The FDA is really fast and has really increased or reduced the approval times for critical drugs. There have been unprecedented advances, new technologies, new products are being developed, and of course, major advances in possible COVID-19 treatments. So biotech always has been a very innovative area of the markets, but not even now, it's more innovative than ever. We're seeing a lot of smaller biotechs. They're partnering with these large cash-heavy pharmaceutical companies. So let's take a quick look. This is IBB, an ETF for biotechnology stocks. And we can see this is a daily, very recent daily price chart. Biotechs were big winners coming out of this March bear market. We had a number of big winning stocks coming out of the gate here. They were involved not only in COVID-19, but also in some of these new technology, the ability to change individuals' DNA so that you can accept certain drugs. A lot going on in biotechs. They did hit a speed bump here. Trump came out and mandated lower drug pricing. So biotech stocks did fall out of favor. Again, you're going to use this daily chart. The RSI turned negative. It broke below that 50-day. But take a look here more recently. It has shifted. We are seeing positive volume characteristics as we are beginning to form the right side of the base. It's now back up above that 50-day, so quite constructive here for biotechs. And I'm sharing with you a longer weekly price chart. Biotechs are breaking out of a 5-year base, and you're wondering, well, that's nice. What does that mean? Well, again, going back to historical studies, the longer your base, this is again 5 years, the breakout from a long base historically is you will have a longer advance out of that base. And we really only have to go back to this period here. This was a 5-year advance coming out of a 5-year base. So and then this was also a highly innovative period with genetic DNA and uncovering individuals' DNA, new cancer treatments, and so forth. So biotech's looking quite good. Technology has led the markets, and I'm just going to share some of my ideas on why it will continue to lead. Cloud computing and that concept of keeping workers as well as students and others connected. Rollout of 5G networks, it's finally taking shape. Apple's due out with their 5G enabled iPhone later this month. This is all about cloud computing is big in that area. And then artificial intelligence, it's really improving productivity across many different industries. So these are all tech related. A quick look here at a daily chart of the technology sector. This is taking us into August. I'm pointing this out because, again, from my work back here in August, we were able, April of this year, we were able to spot this bullish move into technology, and then from there drill down and capitalize on some of the big winners out of that bear market. This is a recent chart. We can see how tech really had this explosive move out of that bear market, and then more recently, it's recovering from this sell-off in the beginning of September, but it does have positive characteristics. One of the leading industry groups within technology, and that is semiconductor stocks. These companies provide chips that are needed in absolutely every industry. They help improve the speediness of data being transmitted. Just absolutely every industry is utilizing these semiconductor chips that are getting smaller and faster. So it's currently poised to break out of this base. It's been a big winning area, but it looks poised for more upside. Here's one of our leading stocks. We actually held on to this. We had picked it up in December, and it's up about 190% from there. Again, NVIDIA, NVDA, one of the heavyweight semiconductor stocks. And again, I'm just pointing out to you how earnings can be that big driver. And NVIDIA is in all of these growing areas of the market. They provide chips to the gaming industry, data processing centers, just 5G networks and so on. So very, very positive looking chart. And the company, again, is in that growth area. So you're using not only this chart, the earnings, but also these other outside positive metrics. Here's another big winner among and within semiconductors. This is Qualcomm. And this, what I did want to point out to you, is a current chart, but take a look here at the end of July. The company came out with earnings, gap up, big gap up. They also had news about a lawsuit that was very constructive in their favor. But more importantly is this gap up on earnings on huge volume. This is institutions, they want in. The stock breaks out of a base on big volume and continues to advance. Unfortunately, this is that September peak that we've seen in the markets and elsewhere, but take a look. It's recovering very, very nicely. A lot of tech stocks and other areas broke this key 50-day. When you see a stock find support, outperform its peers, it's telling you that it is a leadership stock. Pardon me. So I did want to share that with you, that particular name. So let's go ahead and talk about how you can, some of the ways that you can screen for some of these big winners that I've been sharing with you. So we talked about stocks hitting a new high in price. That would be a very common and certainly easy to access type of a screen. If you see a stock that is up on volume, so you want it either hitting a new high or quite simply it is advancing on volume, and it's in what I call a strong area of the market. So you're going to want to certainly, I would urge you, if for instance, my MEM Edge report, I am doing all of that work for you as far as identifying those strong areas, but it is a great way to indoctrinate yourself to how the market works. Where is the strength? Why is the strength there? I have a lot of subscribers, and I do get an immense feedback as to how it really helps them take the training wheels off. I've had people that subscribe to it for some time and will say, I'm ready to fly, because it is teaching you this concept, where to fish in the stronger areas, what stocks are up on volume, why the strength is there, so that you can then do that on your own. Is the stock outperforming the market? You want relative outperformers because it is telling you that there's something significantly positive about that stock. That relative outperformance oftentimes will continue for some time, as we've seen in many of our examples. And then, of course, screening for those strong earnings and sales. So you can do it either way. Start with this, where you're screening for strong earnings and sales, and then look to see if it's hitting a new high or if it's up on volume, or the other way around. And then, is the stock in the beginning of a consolidation period? We talked about stocks breaking out of bases. So I did talk to you about Shopify quite a bit. I'm also sharing with you, we were looking primarily at daily and weekly charts, and a lot of that was educational, but of course you can use intraday charts. This is a 1-hour price chart of Shopify, and I'm going to point out to you how you can utilize these intraday charts to help you with your entry and exit. And this is going to be for those of you that are faster in your trading. Potentially you're a swing trader, maybe you're an intraday trader, but what you want to key in on here is very similar to that daily price chart. This is Shopify, and this chart takes us back to April of this year, but the relevance still stands. When a stock is in a downtrend, it's broken below these simple moving averages. What you want to look for as far as buying opportunities is this downtrend being reversed, and that's identified by the price breaking back above these, in this case, a 5 and a 13-hour simple moving average. So we see it breaks back above it. It does so in conjunction with an RSI turning positive. And let's go down here. We can see the MACD is also turning positive. It had this positive crossover, that black line up through the red. So you can marry that. This particular advance, we can see it was a multi-day advance before the stock did go on, get under distribution again. And that's indicated by the stock breaking below these simple moving averages, the RSI trends south, and the MACD trends south. Now, this particular downtrending period lasted for quite some time, but it's going to be really helpful for you. You might get these head fakes here, but take a look. The RSI never got positive. The MACD never had a positive crossover. Likewise with this potential head fake, where for 1 hour it breaks back above the simple moving averages, but you're not getting these outside indicators confirming that. It's not until about 3 weeks later we finally break up above these simple moving averages rather decisively. For those of you who could you would also want to look for that RSI and that MACD trending upward, so you could take advantage of this move from 380 up here to 480. Significant move before we again have this breakdown of the stock below the key moving averages and back up. So you can see the more that you drill down your chart from weekly, daily, hourly, you're going to get a lot more as far as detail, but it's also going to be a lot whippier. But again, if you're nimble, you have a system in place, you can take advantage of this. So we can see beginning of April, this break back above, and it went on for, in this case, 3 weeks and beyond. This is taking us to April 20th, and the stock, as long as it remains above the simple moving averages, your RSI remains positive, as does your MACD, you are in good standing. Here's another chart we can take a quick look at. Coupa Holdings. This is another software stock that had been a big winner for us. This is an older chart from 2019, but I did want to share with you again that concept of strong earnings and breaking out of a base prior to an advance. Again, another release of triple-digit year-over-year earnings prior to this big advance. I am going to share with you today's offer, and it is something that I want you to take advantage of, and that is a 4-week trial of my MEM Edge report. And it is a lengthy report, but it's very, very simple. I get a lot of, not simple, but actually what I mean by that is that it takes these bigger concepts and really uncomplicates it and puts it in language that is very, very understandable and relatable. It is biweekly. It comes out Sunday is the larger report. Wednesday is an updated report, but oftentimes I'll do alert reports. Last week I put out a report every day except Friday. So I had a Monday, Tuesday, Thursday alert in addition, just because we were experiencing such volatility, we were coming, industry groups were coming back into favor, and I was putting more money to work, putting stocks, alerting them, alerting subscribers to stocks that were starting to turn bullish. So that's not going to be every week. It's really going to depend on the markets, but for sure the Sunday and that Wednesday report. So you do get that detailed analysis of the broader markets, individual buy and sell candidates, and I also provide entry and exit points. You're also going to be provided with the ongoing performance. There's a lot of transparency. It's not, and oftentimes stocks, we will stay with them as long as they remain in an uptrend, but throughout that uptrending period, the report will indicate whether it's in a buy zone or a hold zone. So should you enter or should you just stay with it? Is the group that it's part of still strong? We've been able to get into, in addition to those tech, a number of really super nice industrial stocks as the markets are beginning to broaden out. And then you can go to my website, take a look. I have an example report there. You can take a quick look at it and also take a look at some of the more recent winners from our list. Normally for 4 weeks, it is $97. You can trial it for $7. I believe there is a link and there is a promo code, $7 offer that you'll want to use with that. But all of that's on my website as well. So urge you to, for $7, take a look, educate yourself further as to where we are in the markets. I get constant positive feedback from subscribers really on a daily basis. It's really quite rewarding to hear from individuals. So I'm going to ask if there are any questions that might be out there kind of at the end here.
Excellent. Hey, Mary Ellen, it's Raleigh here.
Mm-hmm.
I've noted some things throughout your presentation that came up. First of all, unbelievable market and sector analysis for today. I mean, seriously.
Oh, good.
That was tremendous. And I really like the way you blend fundamental and technical analysis in your approach to the markets. One of the things that came up was, I know that you have criteria for what you look at, but more specifically, is there a favorite basket of stocks that you like to focus on, or do you primarily just rely on the scanners and what's happening to determine those sectors and those stocks that you take a look at?
Yeah, so oftentimes over the years, I've been doing this for many years, and certainly with my newsletter, there is going to be a general predisposition toward technology, and that just has to do with that's where all the innovation has been, certainly since the 90s. And you'll go through peaks and valleys, but by and large, that's where the innovation is really taking place, where things are, you can store your information in the cloud. You can transfer data very quickly. In fact, even the discovery of COVID-19 as far as breaking down the components of this new SARS, this new iteration, was done in a record-breaking 1-week period, as opposed to the 2009 SARS where it took months. And that's all because technology, they were able to input all this data and crunch it faster. So just by nature of the economy and the markets, it is going to be tech. And then also, while it's not innovative, if you go back each and every century, you go back to the 80s, 90s, 2000s, and you just take a look at the top 10 winning stocks for that decade.
Uh-huh.
And oftentimes it'll be littered with retailers. In the 90s, it was Gap. So there is a predisposition there. I talked about Lululemon.
Right.
Yeah, so.
No, I thought, once again, just thought it was amazing the way you broke that down. The other thing is this, that obviously was an emphasis was, that fundamental reliance on strong earnings report as being a motivator to look and potentially invest in something. And some people were wondering the question, do you have a strategy for like trading around earnings releases? Do you avoid them? Do you look forward to them? What are your thoughts there?
Yeah, that's actually a great question. A lot of people are gun shy around earnings. If you look at earnings, and this is something that's so critical to my work, oftentimes at least 82% last quarter came in ahead of estimates. So when you're going into earnings, you not only want to see, are a lot of companies reporting ahead of estimates, but how are the markets responding? Are they rewarding those companies? And so if you own a stock and you are longer term, I stick with it through earnings, just because the odds, those statistics are in your favor. Historically, particularly during this period, a lot of analysts have really lowered their estimates, unknowing what to expect during this period. So I will stay with, I won't buy right before for 5 days going into the release, but certainly if you own it, I'll stick with it.
Sure. So, I mean, there's that old adage that people are underestimating and look to overperform, whether you're the company or the analyst. Nobody wants to be on the wrong side of that. And that tends to favor the results being more favorable. That's interesting. And that's excellent advice there. Let's see what we had here. Marianne, also you have a focus on stocks there. Do you also trade options or have advice for options traders as part of your services?
Yeah, so that's a great question. I do have a number of subscribers that trade options. They use my service and they do use options to capitalize on those precise entry points, the anticipated move. Here's what we're expecting. So I don't have it myself, but I do have people use the service for and trade options with it.
Sure, I can see that would be that would make all the sense in the world. Mary Ellen, we're up against the top of the hour. Thank you so much for your time today and for that terrific, I mean, really, that great market and sector analysis for all of us that are here. We're delighted to have you as part of Women in Wealth.
Wonderful. Thank you very much.
You're a part of that formula there.
That's right. That's right. I appreciate the opportunity.
Thank you.
Thanks so much, Mary Ellen.
Oh, you bet. Good to see you guys.
You too.
Take care.
Take care.
Okay, I'm going to switch screens here just for a second. And there we go. So there we go. So once again, terrific presentation from Mary Ellen. Like so many of the speakers that we've had, Pat and Nikki, I mean, these are people that really know their stuff. They have dedicated their professional lives to what they do, trading and investing. And it's just fantastic the way they're sharing this information with us during this live workshop. And she mentioned her special report, the MEM Edge report, the trial subscription for $7 for the month. I mean, my gosh, let's all jump on that immediately. It's a twice a week must-have stock market report. It includes the detailed market analysis and current buy-sell candidates. And just make sure when you go to that link, you'll see that it's available for $97. But if you type in $7 offer as a discount code, you'll be able to get that for $7. westmarktrading.com/M9 research will take you there. So fantastic presentation. Guess what? The trains are still running exactly on time. It is the top of the hour, and let's take a little break and have some fun here.
I'm ready to have some fun with quiz time. As we say every time, first person to answer correctly is going to win a $100 Amazon gift card. Our moderators will watch both chat and Q&A for the first person to answer correctly, and then they notify us. So if you would, once you win, give them the same email address you use to register so that we can actually contact you to give you your gift card. So Raleigh, let's have that question. Who invented the game of Monopoly? So this is going to be a female? I had no idea.
Me either.
Oh, that's pretty cool. All right. The game of Monopoly. Oh,
Nobody yet?
we're going to have Googlers again. Oh, no. Nope.
This would not normally be a top of mind thing.
And so we have Carla Carter. Congratulations, Carla. Let's
Congrats.
see. She knows the answer. I want to see it. Lizzie Maggie, 1903. I'm going to have to
Yeah,
look.
and it's interesting to Google the backstory there because like in many of these cases, she invented the game, I think was paid $800 for it. And of course, I think Parker Brothers made millions of dollars. But I always thought it was something that came out of the Depression, 1929, the concept of that. But in 1903, she laid the game out. I was interested in this person. So I encourage people to Google Lizzie Maggie and just see a little bit more about this because it's a pretty interesting story.
I'll check that out tonight. Pretty interesting stuff.